Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lanny, your favorite dividend investors of the world, guys. Thanks for rocking with us on this Thursday morning. We've got a stock bringing back yet again on this channel because they are down now 10% this year, and they have eclipsed below a certain stock price point where you just got to buy the stock right now while it's undervalued, while it's too cheap to ignore, with a yield over 7%.
Smash that subscribe button. Give this video a thumbs up. Let's talk dividend stocks today, Lanny. I can't wait to talk about this company one more time.
Man, I swear this company just can't catch a break right now, guys. We're going to head into the pharmaceutical space. Again, stock prices are as of the close of September 12th. Filming this here late on September 14th, Sunday night. So hope you guys had a great weekend and are having a great week buying and investing in dividend stocks, of course, guys. But Bert, we are talking again about, please don't hate us for talking about them, but we got to bring Pfizer, ticker symbol PFE, back to the table because they are down now, gosh, over 10%, I swear, in like the last month. Or
Yeah.
like 7%. What is it the last month?
I think last time we talked about them, it was like 25.80. I want to say it was about that. They are down 5% in the last month, but they peaked at 25.88 on August 22nd. So they're down from that peak.
Down $2, almost down 10% from the peak, down 5% in the month, and they are down 35.5% in the last 5 years, guys.
Yeah.
Man, and this stock, again, to recap, that last quarter earnings back in June, revenue was up double digits, guys. Diluted EPS, not the best, but still 51 cents a share.
Yeah.
But the adjusted EPS was 78 cents. And not only did they reaffirm, but they actually raised the adjusted diluted EPS guidance. So it's like, revenue's up, guidance is up, reaffirming everything. They're on a cost-cutting mission, and they've got a bunch of things in the pipeline still. They're well beyond COVID vaccine dollar, so that's not even being compared, I don't believe, anymore. So now you're back to basics with Pfizer, and results are showing that they're doing pretty good.
Yeah, and also to add to that, Lanny, they're also cash flowing from operations too. Like their operations are generating billions of dollars of cash flow on top of it. And it just seems like the stock in this sector cannot catch a break. And I think that's probably at the core of what's driving down Pfizer is there's a lot of headwinds that are facing the pharmaceutical sector.
Yep. So, Pfizer, again, down now to $23.87. I've always liked them under 24, and they kind of caught my eye this past weekend. And we're going to run them through the DD stock screener like we always do, guys. Looking at the PE ratio, payout ratio, dividend growth, and dividend yield. Now, don't really like to go for these extremely high dividend yielding stocks, but will be interested if it's already in my portfolio, if I think the company's worth more than what they're trading at, and that they can pay and still even nudge up the dividend, right, Bert?
Yeah, and I think Pfizer might check a lot of those boxes. So let's put them through the screener. Let's check those numbers out and see. That price is $23.87. That forward earnings is $3.09. P ratio of 7.72.
Now granted, 309 is in their adjusted EPS range. I think 310 was the kind of the top line of that range. Now, again, they only earned 51 cents. So annualizing that, it's really 204. So even if you put 204 in the mix, you're at an 11.7 PE. So
the sector,
so
you see like AbbVie and all the other ones in the 12 to 13, 14 range. So yeah, even with the lower end of that, they're still cheaper than the sector.
Yeah. Now the payout ratio, paying 43 cents a share per quarter, $1.72 a year. Based on that EPS of 309, they're at a 56% payout ratio, so a safe dividend. And if you do want to break it down to 204, they're at 84% payout ratio, again, alarmingly high, but not like running for the fences like a Dow Chemical or a Lyondell Basel, like over 100 whatever percent, 200%.
I think I like that 309 EPS payout ratio a little bit better at
You
that 50,
don't say.
yeah, at 56. Dividend growth has been stagnant, 2.63% over the last 5 years on average. They have increased it for 14 consecutive years, but this isn't the high growth phase of Pfizer's dividend growth journey. That is,
No, we've gone through, I think, about what, 4 years of just 1 cent
yeah.
straight, or maybe it's been every year 1 cent. I think actually, when I think about it, I think it has every year has been 1 penny for the last 5 years because they just did this time 5 years ago. They were just wrapping up the Upjohn Mylon
Yeah.
business combination between those two entities, and we were all shocked when Pfizer says, "You know what? Though we just did this, we're still going to increase the dividend because even though you just are getting dividends from Viatris, we're still going to raise our dividend as well." So that was, remember that big shock?
Yeah, that took some cojones from Pfizer to announce that post split off dividend increase.
Yeah. So until we see maybe the EPS, normalize a little bit here, it might be just a 1% again this year. But
But it's
why is that okay?
well, I was gonna say I know why you want me to say. I have another reason too. I'll say it after this. It's
Yeah,
okay because the yield is 7.21%. So you're getting paid to wait for that dividend growth to come.
100%. But what else did you want
Yeah.
to chime in with?
I was gonna say, I mean, this comes off there. You don't want them to grow just for the sake of growing it and then have to cut it thereafter. So you'd rather them do the 1 cent, even though it might annoy you for a little bit, only to better preserve that 7.21% yield and keep it safe.
Yeah, I'd even be open to like a half a cent if they needed
Don't you even
to.
open that door.
Only saying that
Don't bring
because,
that bad juju here on this channel.
hey, take it easy. So that's Pfizer, guys. Again, down 10% this year, down 18% in the last year, down 36% in 5 years, still 136 billion by market cap. So if anybody's interested in freaking acquiring the company, by all means.
I mean,
But again, I like the stock under 24. It's hard not to. You get a nice yield. So those income investors out there that are seeking a solid, big passive income jolt to that, it's again, do your own research, not professional advice, but I like the stock, and I might even grab a few shares here at current prices.
yeah, it's one I own already, so I don't mind if I'm just looking, say on a Friday, I'm like, I want to put a few dollars in, just grab a couple shares of Pfizer. Like it's not a bad one to add because it has shown potential to jump up too. As we said just a month ago, it was up over $2 per share. We've seen it in the 30s before. It feels long ago, but it wasn't really that long ago in the grand scheme of things for Pfizer. So if you have a position, it might not be a bad time to lower your cost basis too.
All right, guys, what are your thoughts on Pfizer stock? Do you think PFE is a stock to buy right now? Are you staying away? Do you call this dead money? Or do you still think there's a lot of, I guess, valuable assets within Pfizer that makes this a good company that's trying to, generate an improving and increasing revenue and improving balance sheet? Let us know in those comments, guys.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.